Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on Monday, May 1st, 2023. And okay, everybody, buckle up. American banking giant JPMorgan Chase is set to acquire First Republic Bank's assets. This is after early efforts to rescue First Republic failed. The California Department of Financial Protection and Innovation closed First Republic Bank on May 1st. This morning, the FDIC entered into a purchase and assumption agreement with JPMorgan to protect depositors. And we were just talking about this situation on last night's show. So JPMorgan assumes all assets of First Republic Bank, to include uninsured deposits. First Republic Bank currently has $229.1 billion in assets and $103.9 billion in deposits. Also, 84 locations of First Republic Bank will open as JPMorgan across 8 states. All depositors of First Republic become a part of JPMorgan. They also have access to their total deposits insured by the FDIC. Customers can continue to bank at the current branch until they receive any change notification from JPMorgan. And that's not all. A loss sharing agreement was also agreed upon between the FDIC and JPMorgan for residential and commercial loans acquired by First Republic Bank. The FDIC and JPMorgan will split the losses and any recoveries on those loans. Trouble started for First Republic Bank on April 26th. That's when the rumors about a government receivership started to go around. Bank shares started tanking from that announcement, dropping a total of 20% in just hours. After the announcement, things were even more volatile for the bank. And then the regulators eventually closed the bank. First Republic Bank joins Silicon Valley Bank and Signature Bank in becoming the latest U.S. bank to collapse in 2023. The failure of First Republic Bank is a direct result of the U.S. government's war on cryptocurrency. The government has been trying to regulate and stifle crypto for years. Now their efforts have finally come to fruition. First Republic Bank was one of those few banks willing to work with the crypto industry. They offered services to cryptocurrency businesses and investors, and they also helped to make the industry more accessible. Well, now that bank is gone, all because of the government's interference. On the other hand, the acquisition of First Republic Bank by JPMorgan Chase is likely to have a positive impact on the crypto market. JPM is one of the largest banks in the world, and they have a strong record of managing risk. The acquisition of First Republic Bank will give JPMorgan Chase a larger presence in the cryptocurrency market. That may lead to increased investment in cryptocurrencies. Now, thank you for sticking with me tonight. I'm going to ask you to help me out by clicking like, follow, and subscribe. Just doing that or leaving a rating or a review, that makes a big difference in reaching new people. So thank you. Nigeria's SEC is preparing new regulations for digital asset platforms. They're considering allowing licensed digital exchanges to list tokens backed by specific assets. Assets such as equity, debt, or property. Cryptocurrencies like Bitcoin and Ether did not make the cut. They also plan to register fintech firms as digital sub-brokers, crowdfunding intermediaries, fund managers, and tokenized coin issuers. The SEC will not register crypto exchanges, not until the central bank provides clear regulations for the crypto market. And clear regulations kind of sound nice. License applicants would undergo a year of regulatory incubation. That incubation period allows the SEC to study their operations and render services in the country. The central bank banned local banks from providing services to crypto platforms in early 2021. They cited high risks associated with trading cryptocurrencies like Bitcoin. Despite the ban, Nigeria has emerged as one of the most active countries regarding adoption. Nigerians are also quite curious about Bitcoin and other cryptocurrencies. According to Google Trends, Nigeria ranks second by search interest for the keyword Bitcoin, behind El Salvador. And we know what happened in El Salvador. Not content with just prohibiting cryptocurrencies, the Central Bank of Nigeria has been actively promoting the central bank digital currency known as the e-Naira. and the Nigerian people have actively rejected it. Following a sluggish start, the e-Naira reportedly saw increased adoption due to national fiat reserves facing severe shortages. They forced a situation where there just wasn't enough physical currency to go around, and people had to adopt digital fiat. Two major cryptocurrency exchanges have been fined by the US government. They stand accused of violating sanctions and securities laws. Poloniex is owned by a consortium of entities, including Tron creator Justin Sun. And we'll be talking more about Mr. Sun here in a bit. Poloniex will pay $7.59 million to settle allegations that it allowed customers from sanctioned jurisdictions to trade up to $15 million worth of cryptocurrency. CoinMe is a Bitcoin kiosk company. They agreed to pay nearly $4 million to settle charges that it ran an unregistered security offering in 2017. These fines are the latest in a series of actions by the US government against crypto companies. In recent months, the SEC filed charges against several crypto firms for allegedly selling unregistered securities. It's like it's Gensler's hobby or something. These fines could have a chilling effect on the cryptocurrency industry. Some investors may be hesitant to put their money into crypto if they fear that the exchanges they use could be shut down or fined by the government. However, it's important to note that these are just two cases, and most cryptocurrency exchanges are law-abiding businesses. The crypto industry is still in its early stages of development, and as it matures, we can expect to see more regulation from the government. However, in the long term, those fines could actually be a positive development for crypto. The government is helping to create a more legitimate and transparent industry by cracking down on bad actors. This could make it easier for institutional investors to get involved in crypto, leading to increased demand and higher prices. We shall see. And speaking of Chair Gensler, he appeared before the House Financial Services Committee on Wednesday. This was for a hearing about his leadership of the agency. The hearing was expected to be contentious, and boy howdy was it, and it did not disappoint. Gensler was grilled by lawmakers from both parties about various issues, and you know the SEC's approach regulating crypto was on that list of topics. Gensler has been a vocal critic of crypto. He said that he believes that most cryptocurrencies are securities and should be regulated by the SEC, which is an interesting departure from something that he said when he was a professor in 2018, but I digress. This view has been met with resistance for some in the cryptocurrency industry. They argue cryptocurrencies are not securities, and as such, they should not be subject to SEC regulation. During the hearing, Gensler reiterated his position that most cryptocurrencies are securities. He said the SEC is taking a principled approach to regulating crypto. He says that he is committed to protecting investors. Gensler was asked about the SEC's enforcement actions against cryptocurrency companies. The SEC brought a number of enforcement actions against crypto companies in recent months. Gensler defended the SEC's enforcement actions. He said that they're necessary to protect investors. He said the SEC is working with crypto companies to help them comply with the law. The hearing was a lively exchange of views. It highlighted a lot of the disagreement about how to regulate crypto. I think ultimately it's going to come down to Congress setting things right. But as divided as the two political parties are, I just don't see that happening. And that brings us to our cover story for tonight. Meta filed a prospectus with the SEC for new debt shelf offerings. A debt shelf offering is a type of securities offering. It allows a company to register a new issue of debt securities without having to sell the entire issue at once. In its filing, Meta said it, quote, may, from time to time, offer and sell debt securities in one or more series. The company also said that it would issue a new prospective supplement each time a debt security is sold, with each supplement containing the specific terms of the debt securities offered. The filing did not disclose the amount of debt securities Meta plans to offer. Shelf offerings can be a helpful tool for companies to raise capital quickly. They can also hurt the company's price of their stock as new shares are being issued into the market. On Twitter, some have speculated that Meta's debt shelf offerings could indicate that the company is struggling to generate enough cash flow to fund its operations. Others suggest that the company could use their debt to fund their metaverse ambitions. Now, Meta has been investing heavily in the metaverse. The company has already spent billions of dollars on the metaverse and plans to invest even more in the years to come. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating or a review. And in the meantime, we'll see you tomorrow night.